Okay, so our next lesson is a review on the posting process, which is the classifying process of the accounting. So, for example, here is a problem. No, the accounts payable ledger showed a debit posting, I should say, of 200,000 and a credit posting of 400,000. If the balance of the accounts payable account is 250, how much is the beginning balance of accounts payable? So it's very easy. All you have to do is 250 plus 200, that's 450, minus 400. So therefore, the beginning balance is 50,000. So to get the missing figure, so there is a formula below. To get the missing figure from the balance, you start from the balance and then add the debit posting, which represents payments, deduct the credit posting. Therefore, the balance is the missing amount, which is 50,000. To check, you check your answer. 50 plus 400, that's 450, minus 200, it's equal to the balance of 250,000. So that's how easy is the formula. Now, when it comes to asset naman, no, prepaid taxes, for example, here's a problem. Prepaid taxes were 10,000 at the end of September and 15,000 at the end of October. During October, taxes expense equaled 8,000. How much cash was paid for taxes during October? So it's very clear that the ending of September becomes the beginning of October. So if this is your prepaid taxes ledger, you just post the missing date, the given data. So beginning balance for October is 10,000. That is the ending of September. The ending of October is 15,000. And then during October, taxes equaled 8,000. So this 8,000 that is posted on the credit side represents adjustment, no, for prepaid taxes, which means there is an adjustment made by the company debiting taxes expense and crediting prepaid taxes 8,000. That is why there is a credit posting of 8,000. So that is the history of that posting of 8,000. So therefore, using the formula that we learned from the previous example, this time it's an asset. So 15,000. So I take note that I place the balance on the debit debit side because that is the normal balance of the prepaid taxes. Unlike a while ago, I place it on the credit because that is the normal balance of the accounts payable. So normal balance 15,000 debit, add 8,000, so that means 23,000, minus 10,000. Therefore, the missing amount of the amount of cash paid for taxes is 13,000. Check. So add, this is 23 minus 8 equals 15. So the formula is here below. No? So 13,000 is the answer. Okay. So next, for the adjustments, no, the next lesson again is the adjustments. Now take note of the rule in adjustments. No, if the original entry uses the income method, that is for deferrals of income, therefore in the adjustment you will recognize the liability portion or the unearned portion. While if the original entry in accepting or in receiving the cash, the company used the liability method, then in the adjustments, you recognize the income portion or the income, recognize the income. So in this example, rent income, this is a deferred income. Rent income of 60,000 represents a 5 months rent. 5 months. So therefore 60,000 divided by 5, the monthly rental is how much? 60 divided by 5, it's 12,000. So it was paid on December 31, 2019. So 48,000 of the amount is still unearned. Why 48? Because only 1 month has expired. That is for the month of December, which is equivalent to 12,000. So what is the adjusting entry? So what are you going to recognize? Are you going to recognize the 12,000 or the 48,000? Okay, so go back to the problem, rent income. So that is income. So therefore, income method ang ginamit, no? Being used in when the cash was received. So therefore, we will recognize the unearned. So debit rent income of 48,000 and credit unearned rent of 48,000. So what is being recognized here is the unearned rent, no? The liability. So the income of 60,000 is reduced by 48,000. So the remaining amount in the rent income is 12,000, which is the correct income for as of December 31, 2019. Next is I have here another problem on adjustments. So another problem on deferrals, but this time this is deferred expense, rental expense. So Hevera rent a warehouse from AA Realty from May 1 to 19 to April 30 to 2021. So that is basically how many years? That's 2 years, no? On April 1, 2019, Hevera paid 260. April 1, why April 1? Because that is the start of its accounting period. Take note that the accounting period starts on April and end on March 31. So this is a fiscal year. So Hevera paid 260, but that 260 represents cleaning fee of 10,000, 2 months rent, and a rental deposit amounting to 3 months rent. So therefore, if you deduct 260,000, 10,000 from 260,000, so the remaining amount is 250. So that 250 represents 2 months rent and 3 months deposit. So 2 months rent and 3 months deposit. So equivalent to 5 months. So the monthly rental is actually 50,000. So what is being asked here is what should be the related rental expense recorded on the income statement for the year ended March 31. So therefore, it should be a rental from April 1 to March 31. So that is 1 year. So 50,000 times 1 year. So the amount of rent expense that will be recorded is 600,000. No? 600,000. So that is 50,000 a month times 12 months. Now, what happened to the 2 months rent? The 2 months rent, this is already consumed within the year. So that is part already of the 12 months. No? And the rental deposit, that will not be consumed because that will be returned to the tenants once the tenant will vacate the place. So this is a recoverable deposit. This is an asset, other asset. So what is recorded as rent is only a 12 months period. So 12 months rent. So that is 50,000 times 12 months, which is equal to 300,000. So what is being asked here, you're just being asked how to compute. You are not being asked how to make the adjusting entry. Okay. So next, by the way, if go back to this, to go back to the adjusting entries, no, if what will happen, no, just a reminder, what will happen if this entry, debit rent income and credit unearned rent is not recorded or is not recognized? So what happened to the income of the company? So the income is overstated by 48,000 and the liability is understated by 48,000. So that is the effect of omission of this entry. Now, if the omitted adjustment is an expense, for example, debit salaries, expense, and credit salaries payable, if this entry is omitted, again, what happened to the income or profit of the company? So the profit of the company is overstated by the amount of the salaries not being recorded. And again, the payable or the liability is understated. Okay? So please take note of that. Another problem is this one. Actually, this is just a repetition of what we had discussed on financial statements. So if you have memorized the formula in your financial statements, especially in the computation of your cost of goods sold, net sales, cost of goods sold, gross profit, operating income, net profit, then you will always answer this problem. So another example, ginawaan lang ito ng storya, but this is just a computation of the inventory, no? So EBG company started business on January 1. During the year, the company purchased merchandise with an invoice price of 10 million. EBG paid 400,000 freight on the merchandise. During the year, EBG returned 800 of the merchandise to its suppliers. All purchases were paid for in a timely manner and 150 cash discount was taken. 8,900 of the merchandise was sold for 11,570,000. What was the December 31 balance in the inventory account? So again, let us solve the problem by taking note of what is given. No, give the data the given data. Given data. So what are given data? We have the gross purchases, which is amounting to 10 million. So we will compute here the cost of purchase, no? The total goods available for sale, because it's first year of operation, so no inventory beginning. So what we are going to compute here is the cost. First is to determine the total goods available for sale. So the gross purchases is 10 million. So from the gross purchases, we will deduct less returns. We will also deduct the discount. So the returns is 800,000. 800,000. And the discount is 100,000. So very easy to compute, no, if all the data given is plotted first, no. So 150,000 is the discount. Sorry, it's 150, not 100. So the net purchases is equal to 9 million. So this is the net purchases. Okay? So from the net purchases, you add the freight in or the transportation in, which is 400,000. So the total cost of purchase is 9,450,000. So this is the total cost of purchase. However, since there is no inventory beginning, at the same time, this is the total goods available for sale. Now, from the total goods available for sale, you will deduct inventory end. But since inventory end is the amount that is missing, so how do we get the inventory end? So take note if there is the given cost of goods sold and it is given, no? The cost of goods sold, the cost of goods sold is 8,900,000, no? 8,900,000. That is the cost of goods sold. How do you know that it's the cost of goods sold? The problem says 8,900 of the merchandise was sold for 11,570,000. Therefore, the 11,570,000 is the selling price. And the cost of that 11,570,000 that is being sold at selling price is 8,900,000. We know that the difference between the total goods available for sale and the cost of goods sold is the inventory end. So therefore, the inventory end is 550,000. So this is the answer. So I think you just review your what do you call this? You just review all your financial statements, especially the ratios, no? The one that we discussed towards the end now of the semester regarding the relationship of sales, cost of sales, gross profit, operating expenses, and net profit. So you review all those things. You review also the special journals, no? I think you will not be lost in the special journals. So I think these are all the things that I am going to share with you. But so journal entries, how to record if there is a discount. Now definitely there is no VAT transactions given in the exam. So the VAT is only in your practice set. So please uh, go over your practice set. Work on your practice set.